Hey everyone, welcome to the fourth part of Costco stock fundamental analysis. In this video, we will analyze historical balance sheet of Costco and figure out what narrative it has to say to us. Through this video, I will be using my own application Apex KPI for analysis of the stock. If you would like to play through with my application, I am giving the link of my application in the description section. You just need to sign up and you are good to use. It doesn't need any credit card details. With that, let's get started. So I have already pulled up Costco fundamental analysis or Costco stock analysis. In that, let's go to the balance sheet section. In the balance sheet, as we know, there will be three sections. First one is asset, second one is liability, third one is equity. So we will go through in the same order so that it makes more sense. And finally, balance sheet ratios. That's the final section we will look at. So first, let's get into the assets. Again, you could look it into different lengths, 3 years, 5 years, 10 years, or maximum. But I would prefer to look at it, the 10 years level, so that I would see historically how the company have performed. So in the asset section, the first information I can see is the total assets Costco business have is $86 billion. Out of $86 billion, $45 billion is the current asset, and $41 billion is a long-term asset. So this chart is the total assets for any growing business. I would expect, or you would expect, the total assets to grow. That is the first thing which we could see here. The total asset is growing consistently over the quarter over quarter. Then the second one, asset can be broken into current asset or short-term asset, which is worth within the period of less than 1 year, and another one is the long-term asset. So first, let's look at what is the current asset composition. So Costco have mentioned four segments as a current asset. First one is cash and short-term investment. Second one is net receivable. Third one is inventory, and fourth one is other current asset. So here we can uncheck these three things and first look at the cash and short-term investment. If you look at the cash and short-term investment, in 2016 they had around $4.7 billion. Then consistently they have grown. As of the most recent quarter, they have $20 billion in cash and short-term investment. So all in looking at the absolute dollar term, they are looking at all-time high cash and short-term investments. Next thing is net receivable. That is for the we will check out cash and short-term equivalents. If you see the net receivable, it is also increasing. That is, as a business grows, might be the net receivable will also increase. And this net receivable is the value which the customers need to pay back to Costco for the service or the products which they have got. This is also a good value. This is the second information which you have. Third one is inventory. Of course, Costco as a warehouse business or retail business, they need to stock up their warehouse with inventory. Their inventory is at $20 billion. Might be if we now look at uh, right now the cash and short-term investment or inventory are going hand in hand. That's how historically their numbers are also performed. Then finally, other current asset. That's also a short value, which is around $2 billion. Might be $2 billion is a huge value, but compared to Costco scale, $2 billion is a very minute value. So these are all the four sections which Costco have reported the current asset. But I would also look at this in a different lens. That is, as part of a total asset value, that is, say, we've seen in this previous chart that the total asset is $86 billion as of the most recent quarter or as of the most recent reported period. I would like to understand what is the percentage of cash and short-term investment or each and every section to a percentage of the total assets. That gives me a different perspective. So for here now, I will just switch to percentage of total term. If I do so and just take out the cash and short-term investment, I could see at a point as of the most recent quarter or the most recent reporting period, 23.14% of the total asset is sitting in the cash. But if we look at in the absolute term, you could see $20 billion, which might say they are sitting in all-time high cash, but it doesn't say the other picture, right? Even previously, they were sitting at around 24% of cash. So why I would like to look at in this perspective is by just looking at the dollar term, some number might be misleading. That's why we wanted to see the historical number and figure out how the business have performed. So similarly, for each and every section, I would also look at the percentage of total asset. Net receivable, which is a very minute value between 2% to 5%, hovering over between the same range. Inventory for any business, for especially for the retail business in Costco, inventory will be expected to be high, and as of the most recent quarter, they have 22% of inventory, and historically the inventory percentage is between 20 to 30%. Then finally, the other current asset, which is again a very minute value, like how we saw for the net receivable. So these are all the four sections which Costco have mentioned as a current asset or the short-term asset. Now looking at the non-current asset or long-term asset, they have four line items. The first one is PPE, that is property, plant, and equipment. Second one, goodwill and intangible. Third one, long-term investment, and fourth one, other non-current assets. Let's uncheck the three and look at the PPE. As we have discussed in the first part of video, Costco is regularly opening up new stores, which means they are investing a lot into their business that goes into PPE. That is why you could see consistently the PPE is growing. As of the most recent reporting period, they have $37 billion in the property, plant, equipment. Next one is goodwill. Goodwill, they have reported for some period, but they don't have any goodwill in the most recent pre-reporting period, so it's very negligible. Similarly, they don't have anything as long-term investment. And finally, other non-current asset, they have certain value. But we would also look at it the same lens, how we looked at the current asset in terms of total assets. If we do this way, property, plant, equipment is around 45% or 42% of their total asset. That's how the Costco business is, because most of their asset are in their land, building, and the machineries they own. That's as expected. Goodwill is very minute value, just 1% for 3 quarters. Long-term investment, Costco haven't reported any as such. Then finally, other non-current asset is 5%. So this is the simple information. These are all the key information I would say, which we could get from Costco's asset section. Now let's move on to the liabilities. Even in the liability section, we would see that in the two different lines, current liability and non-current liability. Before that, the total snapshot of total liabilities that is growing, that's expected. Now let's look at the current liabilities. Current liability have five sections: accounts payable, short-term debt, tax payable, deferred revenue, other current revenue. Sorry, other current liabilities. I would take up everything. Just see the accounts payable. Accounts payable is consistently growing, but we will prefer to look at in the dollar. I mean, percentage term. In the percentage term, one thing I love about this Costco business is their accounts payable contributes around 42% of total liabilities as of the most recent reporting period, and historically it has hovered over between mid 30s to mid 40s. Why I feel this number is good is Costco has a good leverage. That is, they purchase the products from their suppliers or the vendors, and they have a leverage to pay the cash after 30 days or 60 days. That is what accounts payable is. That is the cash which Costco as a business owes to the suppliers or vendors. By seeing 40% of liability sitting in the accounts payable, this tells me two things. Whatever accounts payable is, they don't need to pay any interest. Say even after 30 days, they're going to pay the same value or the same cash which the supplier has provided the funds for, provided the inventories for. So this is the first thing. Second thing is short-term debt. If you look at it in the percentage of the total liability, the most recent reporting period, they just have 0.18% of their total liability as short-term debt. This is a very minimal value. Third one is tax payable. They don't have anything as such tax payable in the current liabilities. Deferred revenue, they have very minimal value, which is around 5.97%. And other current liabilities, that is, they might have accrued liabilities like accrued salary, accrued any employee compensation, that is around 22%. And now moving on to the long-term liability or non-current liability, they have three sections. One is long-term debt, deferred tax liability, and other non-current. While looking at it in the total percentage value, long-term debt around 2017 they had 27% of total liability in debt, but as and when the business grown or business is progressing, in the most recent reporting period they had only 10.7% of their total liabilities as a long-term debt, which is the interest bearing debt is very less for Costco. Then deferred tax liability in long term, they don't have anything, and other non-current liabilities or other long-term liabilities around 5%. So in summary, if I want to have a so in so if I want to summarize the liabilities of Costco, I would summarize it in two things. Accounts payable constitutes around 40% of liability, which is a very big thing, or which is a very good thing for the business because they don't need to pay interest when they pay back to their suppliers or vendors. Then, even though any business would like to have a debt, Costco is also having debt, but historically their long-term debt which they had has been reduced, and they are only having a 10% of their long-term debt. This is the two summaries or the two takeaways from the liability section. And third, let's move on to the equity section. So before looking at the equity section, this is a quick snapshot. They have a total of $33 billion in equity. Out of the $33 billion, $26 billion is coming as a retained earnings. So this is the total equity over the period of time. As of the most recent quarter, they have $33.5 billion. That's the same value which you have seen. Now let's understand what are the components in the equity section. There is six components. First one or the first two, which goes hand in hand, is common stock and additional paid in capital. For any business, you would expect these two numbers. Third one is preferred stock. Fourth one, retained earnings. This contributes to the majority of the retained earnings for Costco. Fifth one is AOCI, other comprehensive income, and the last one is other equity. So now, if we just take a look at these two sections, which is common stock and additional paid in capital, common stock is going to be a small value, which is 2 million, and additional paid in capital, as of the most recent period, they have $8.6 billion. Then next one, preferred stock, they don't have anything as such. As a preferred stock, whatever stock they do buyback, they would put it into they would retire it rather than having it as a preferred stock. Then retained earnings, yes, it is growing consistently, but you would see a huge dip from this November 23 to Feb 24 and August 22, November 20 time frame. Um, think of it, why do you think the retained earnings has dipped? We have already covered the reason why the retained earnings is lesser in cash flow statement, specifically in the financing cash flow. Just connect the reason or just think through why the retained earnings have dipped, and there is a direct answer which is in the financing cash flow. If you want to play through my application, just use the link in the description section and just register yourself and play through. You would figure out the answer. I feel this is more important for any business student to understand, to correlate all the three financial statements. The next one, AOCI, this is a very minute value which is hovering over between uh, negative $1 billion to negative $3 billion. And finally, they don't have anything as other equity. So this is the section, or this is the information we would like to get from the equity section of a balance sheet. Then finally, I would like to review some of the ratios. So the first thing what I would like to see is, what is the total debt the business have, or do they have any debt? In the case of Costco, yes, we have seen in the liability section, Costco is having a long-term debt of around, you know, $5 billion, plus they have very minimal short-term debt. I would like to understand what is the net debt they have. Net debt is nothing but what is the total cash and short-term equivalents they have, subtracted with the total debt. We will get a value that is a net debt IC. So in this case of Costco, they literally don't have any debt. In the most recent reporting period, if you see the small, the tooltip, the net cash is $14.23 billion, which means they don't have any debt. How we came up with this $14.23 billion is cash plus short-term investment. This is the first thing we saw in the asset section. It is around $20 billion, and they have a total debt of $5.7 billion, which is short-term debt plus long-term debt. By just adding it up, they're sitting at a net cash of $14 billion. And historically, you see, throughout this period, only 3 quarters they were sitting at it in the net debt, but it is also at a very minimal number. So the first takeaway from this balance sheet ratio number is Costco is a very healthy company that it doesn't have any debt as such. Second thing is debt to equity ratio. That is the key takeaway a lot of analysts would see. In the debt to equity ratio, there is always a difference between two aspects. One is interest bearing debt, and another one is total liability. So, what is interest bearing debt is? In simple words, what debt to equity, how people will calculate is figure out what is the total liability, divided with the total equity, we will get a debt to equity ratio. That is a very commonly or generically used debt to equity ratio. But what makes more sense is to figure out what is the interest bearing debt, that is long term debt and short term debt in the liability, divided with the equity. That number gives me a more clarity on what is the interest bearing debt rather than looking at the whole of the total liabilities. So in this case, the debt to equity ratio, the stricter one is means interest bearing debt. It was at a point of 0.6 during 2017, but the beautiful part is the number has been reduced consistently and it is at just 0.17 of debt to equity ratio for interest bearing debt. That is, for every $17 of debt they have or interest bearing debt they have $100 of equity, which means they are sitting in a healthy number. But if you look at the debt to equity at a broader level, that is dividing the total liability at with the total equity, you could see a different story. It says the most recent quarter they have 1.58x. Technically, we prefer to see the debt to equity ratio less than 1. But in the case of Costco, we have seen 40% of liability which Costco has is in the accounts payable that doesn't incur any debt. So that is why I always prefer to see the debt to equity in two lens, one as interest bearing debt and another one as total liability. In this case, Costco's total liability of debt to equity is much higher, that is 1.58, but my interest is more on interest bearing debt, which is 0.17. This is the second information we can get from this segment. Then the third one is quick ratio and current ratio. This is the two information which we'd also like to get. Current ratio is nothing but the current asset by current liability. Always prefer to have this number greater than 1. If we look at historically, sometimes it is less than 1, but predominantly in the most recent 4 or 5 quarters, the number is greater than 1. And next one is quick ratio. Quick ratio is nothing but in the current asset, exclude all the inventories. Just take cash and short term investment plus net receivable divided with the current liabilities. This number, it would be preferable if you have greater than 1, but it's not. But still, we would like to compare this number with the Costco's peers. But still, it's not a very alarming number. It is at a decent value of 0.66. So this is the two information which we could get from the balance sheet ratio segment in my application. You would be wondering, while looking at the balance sheet, we also need to see the ROE, ROCE, but that is in a different tab in my valuation metric. If you go to this section as return metrics, you could see ROE, ROIC, but that is for a next part of the video. So that's it from this part of video. I hope you found out a simple, so you found out an efficient way to analyze the balance sheet of Costco or to a matter of fact any business. If you like this video, please consider liking and subscribing to my channel. And if you want to play through my application, please use the link in the description section to play through. If you have any questions or comments, please feel free to just drop an email to the email address given below. Thank you. Take care. We'll see you in the next part of the video.